So just sort of digesting all what's gone on this week then with China's data, US data, um, sentiment for a pivot at the Fed, and so forth. The US dollar then is essentially breaking a micro trend line on the lower charts. So the thesis of the bullish flag I can now erase, and I'm more focused on this potential continuation into a weekly trend line for the dollar and carving out this reversion pattern on the weekly chart as well into a support over here, this sort of support zone, potential support zone that will have a confluence um, with the trend line. That puts parity in the euro in focus and above. For the meantime, these have a tendency to correct. So we'd have the neckline as a potential target for that. But this is all in the build up to the Federal Reserve next week. But until then, I think we could have a bit more downside. When we look at the hourly chart on the Dixie, it's not really showing much signs of wanting to correct. It's sort of carving out this symmetrical, well, descending triangle, I guess. So, I mean, this could result in a continuation lower, which opens prospects on the euro here for moving up with a similar pattern being formed over here. Might be a bit early days to bank on this pattern though, but that's what we have to run with for the day ahead. That sort of scenario. We move over to gold. This is really interesting. So this is from a daily perspective. We've got this dominant trend line that was broken here with that break of structure. So you can pause the video and check this out. But this is what we've got, and we've moved back in, stalling a little bit here, over here. We've got this W formation, which I haven't actually drawn in. So let's get rid of this. So this is like a peak formation holding so far at resistance, support. So if we pull that in there. So not only is this like a double, well, it is a W formation, and if we just make that more visible, holding at support. We also have prospects of a head and shoulder. So head, left hand shoulder, right hand shoulder, so an inverse head and shoulders. So this is very much looking bullish to me, and stalling at last week's and last month's lows. If we measure this range so far, a 200% measured move to the upside coincides with last month's high. And in doing so, in that move, see, we've already broken to the backside of this trend line, the correction of the break. And we've moved out of that. We're sliding out of that. So we've got a new structure over here. And if we break that on this leg here, then the right-hand shoulder of the head and shoulders will be confirmed. And we could have sort of a scenario such as, just draw it from here now, sort of up, down, up again, in, and so that would be the sort of the outlook for gold. Now we've got the Fed next week, so structure needs to be built into here ahead of the Fed, so we get sort of a neutral position. So that if it does want to take off, it's already broken the structure and the pathway is very clear for the bulls. The target 1700 over here for the onward journey up to last month's highs to complete that sort of accumulation of this trend, which we can now draw over here, touching as many resistances as possible to get a decent. So there you go. So that really is the target. So if we can get into here this week, this area, right? That's the target for the days ahead. So 1680. 1680, and then for a break of again 1687, right? 1688, 1690, call it, for the move up. Okay, so that really will depend on the trajectory of the US dollar, whether it can continue lower over the next couple of days. Don't see why not. An extension of this weekly bearish impulse into the Fed. And then at this point down here, it will be make or break time depending on the Fed's outcome, whether we continue lower for an extended M formation or whether we're going to hear more of the status quo for a move back up to clip the wings of the risk rally in gold and Aussie and Euro, etc.